And welcome back to the show. I'm your host, Lance Roberts. Great thing about live podcasts, we can screw anything up. Speaking of screwing stuff up.
Yeah?
That would be Elon Musk.
Oh my goodness.
So
I can't keep up with the memes. I'm going to have a whole weekend because they got him in all different stages of smoking. And you know how they catch faces?
yeah, so that's the whole issue right here is that yesterday, for some reason, Elon Musk decides to go on Joe Rogan's show. And, as Rich was just saying, wanted to partake in a little bit of the fun on the show.
Whiskey and some...
Exactly. Here's a clip from the show yesterday.
So is that a joint? Or is it a cigar?
No.
Okay.
It's marijuana inside of tobacco.
Oh, okay. So it's like pot tobacco posh.
You never had that?
Yeah, I think I tried one once.
Come on, man. Want some of that? You probably can't because stockholders, right?
I mean, it's legal, right?
It's totally legal.
Okay.
Hey, you want to get high, man?
That's how they do. They got wooden balls, man.
I got a joint here, man. I've been saving for a special occasion.
They on fire up.
I heard you could get the Cheech and Chong package with in your Tesla now.
I wouldn't.
Trim grade.
It's green.
You know, the only good thing about this is at least you can use this flamethrower to light your joint. So,
And you got a munchie bag inside the dash.
But as Elon Musk actually wound up reaching out for the joint, Joe Rogan added the following.
How does that work? Do people get upset at you if you do certain things? There's tobacco and marijuana in there. That's all it is. The combination of tobacco and marijuana is wonderful. First turned onto it by Charlie Murphy and then reignited by Dave Chappelle. There you go.
Plus whiskey. Haha, exactly.
Perfect. Balances it out.
I mean,
I'm a firm believer in
alcohol's a drug. It's been grandfathered in.
Well, it's not just a drug. It's a drug that gets a bad rap. Because if you just have a little, it's great.
Fine.
Yeah, a little sip here and there, and your inhibitions are relaxed, and it shows your true self, and hopefully you're more joyous and friendly and happy, and everything's good. The real worry is the people that can't handle it, like the real worry about people who can't handle cars that can go 0 to 60 in 1.9 seconds, or anything.
Dude,
Kind of grabs you by the boo-boo, don't it?
hey, man.
What?
Hey, what's in this, man?
Mostly Maui Wowie, man.
Yeah?
But it's got some Labrador in it.
What's Labrador?
Yeah, my dog ate my stash, man. Had it on the table in the little cup I created, man.
Yeah?
So I had to follow him around a little baggie for 3 days before I got it back. Really blew the dog's mind.
You mean we're smoking this shot, man?
So Elon Musk today is stock down another $6 and change by the end of the day.
You think?
So, I think there's a few things that when you go to the Harvard Business School when they teach you about the great CEOs of our country, they're probably going to say you don't go on a talk show and smoke a joint as the CEO of a company. And especially not when you're under investigation by the SEC. Right. So it probably doesn't work out well.
The impact to Nike from Kaepernick was nothing compared to what happened with Tesla. Yeah. It's, again, I don't know. He has been hit with a barrage of bad news. A lot of it brought on by himself. It's almost like he's purposely doing this to raise the ire of the public officials. I'm not sure.
He got himself into this exchange. It started out twofold. One was when analysts during his quarterly conference calls were starting to ask him questions, and he's like, "Well, that's a dumb question," and walks off the stage. Of course, the problem that Tesla has right now is production. They missed their production targets again, and there's a lot of trouble with the Teslas that are being done. It's an interesting story out, and this is one of the things we talked about before. One of the biggest problems that Tesla has coming up is competition from the likes of Porsche, BMW, Ford, Chevrolet, et cetera, which are all coming out with electric vehicles. And the big factor with those companies is not only are they already geared up to mass produce and mass distribute, they already have a fleet of companies and stores and individuals to service those products. There's a great story out the other day. Tesla owners that bought the original Teslas are now running out of their warranty, and there's literally no shops to take your car to. There's no people out there that are certified to any great degree to work on a Tesla. So a guy has actually gotten very creative. He's basically disassembled his Tesla, learned how to put it back together, and he's now doing YouTube videos to help people service their own Tesla.
Pretty interesting.
So he says, if you work with Legos, you can work with a Tesla, which that also kind of concerns me a little bit there.
There are fewer parts, that's true. But
well, if I'm just snapping stuff together, that might be another issue. But yeah, so
didn't somebody build a Lego Bugatti just the other day?
I didn't hear this. Did it
that.
work?
Yeah, they drove it down the road.
Did it go 200 miles an hour like an actual Bugatti?
No.
You got to keep in mind, there's a couple of things you got to be concerned about. He's just lost his chief accounting officer.
Yeah, just left, and that's not the first. He's lost quite a few executives.
Right, and the mystique of Tesla has been Elon's brilliance. Okay, so it might, you think of Ford and GM. Frankly, think of old white dudes sitting around in their multicolored shorts, not knowing what the next trend is going to be. Elon is cool and brilliant, but he's going to lose this brand prestige if he keeps going like this. It's almost like he's got a self-defeating prophecy going on. I don't really understand. Or maybe there's something just because he handles everything. He is human. He could be having some form of a breakdown here and just throwing his hands up in the air.
Like I said,
I'm not sure.
Well, like I said, the thing started out with the analyst, and then he got into a fight with the short sellers. And that was really where a lot of this downfall came, is that the shorts were coming out. They were talking down the company, and he takes this very personally. And it's his company, and he takes it very personally. And he came out and he made a statement to basically try to hurt the short sellers, which was, hey, I'm just thinking about maybe taking it private.
Right.
Well, the problem is there's, as a publicly traded company, you can't just come out and make material statements that aren't disclosed, and especially when you told other people first that potentially traded on the stock, that becomes problematic. But again, he let his pride and his ego get a bit better of him trying to go after these short sellers.
So let's get down to brass tacks. If you're an investor and you own these shares right now, and you read this headline news, I mean, not that you want to react to it, but what kind of strategy should an investor have who owns these shares?
Well, if you still own them, your stop loss right now is 250.
Okay.
The stock closed today at 263.
So you got to have some rules. Regardless of what's going on, you always want to have rules, and now you have even more of a reason to have them.
Exactly. So if you break 250, the stock's going to go to about 190. If it breaks 190, there's nothing below it back to $50 a share, which is where I talked about recently that there's a lot of people throwing around the idea about people buying Tesla. Tesla is a good acquisition at $50 a share for somebody. You buy it for the parts, you buy it for the technology, you suck it in, you put in your manufacturing. So like, for instance, it'd be a great buy for a GM or Ford around $50-$60 a share, because basically you're going to buy the true value of the company. Right now, Ford PE on this company is like 96 times earnings, and they have a loss of $1.9 billion right now. So there's really not value to the company, so you're buying tech. So you buy the tech around $50-$60 a share, maybe even stretch it to 100. You roll that in, build that into your Chevy Volt or whatever you're going to do with it, and then start mass producing an electric car.
And maybe GM's got a better shot at it given the debt problems that it looks like Ford is starting to have. So,
Yeah.
Right. And you mentioned this yesterday, is just because you sell it doesn't mean you don't have to buy it back. There's this mental rule that people, once they sell, or investors sell a stock, they don't revisit it again. I already own that.
Yeah.
You that's the beauty of equities and cycles. So just because you have a rule and it stops you out, say at a profit or a limited loss, you can always follow the company. Again, this is the challenge, and I think that's why passive investing is so important, is so popular, right? Who wants to go through all this? Looking at individual stocks.
Right.
I mean, and especially for brokers, why don't you just sell something and move on? I could sell an asset allocation in a box, and I don't have to worry. My friend, when I was growing up in Brooklyn, one of the neighbors dad was a stockbroker, and he would talk to us about all the research that he did. It was amazing. I don't see a lot of that now. It's probably why stocks never split. Because I got that question the other day.
Stocks don't split anymore.
Yeah. What are the couple of reasons, or I think I gave the right answer, but why don't stocks split anymore?
There's only one reason stocks don't split anymore. It's earnings per share. So, look, I mean, I wrote an article last week on the website talking about Q2 earnings review. And if you look at earnings per share growth has been going up, but you have a dramatic decline in the number of shares outstanding in order to generate a slightly higher earnings per share number, even with tax cuts. So, the issue is if I split shares, then I increase the number of shares. So in other words, I earn $1. My company earns $1 per share. So let's say I earn $1 in revenue and I've got 10 shares in my company. So I earn $10. I've got $1 per share in earnings. Got 10 shares. Well, if I increase the number of shares outstanding to 20, my earnings per share goes to 50 cents. Now, what company wants to do that today when everybody's looking at what's your earnings per share? What's your earnings per share? What's your earnings per share? I remember back in 1999, 2000, 2001, 2002, 2003, people would call me up. It's like, ExxonMobil's like $80 a share. It always splits when it's $80 a share. And that used to be a regular occurrence. Now you're looking at stocks trading at $1,000 or more dollars a share. That used to be unheard of.
I think people can't buy them. I think my reason was a little more onerous in the fact that nobody cares. Because nobody buys stocks anymore. They buy indexes and then they buy the stocks. Nobody's looking at the price as some trigger.
Yeah.
In other words, why? To your point, good point. And I'm also like, why bother?
Yeah.
Because if I own the index, I need to own the stocks anyway.
Yep.
So who cares what price I'm paying for it? Passive investors are price agnostic. They don't care. There's no price discovery. So what's the big deal if the stock's $1,000 a share or 50?
But I'll tell you what, when it comes to vehicle stocks, I am looking at Ford. It's $9.27 today. It's got a Ford PE of 6. Income of $6.3 billion on $158 billion of sales. Debt to equity's high. I mean, I would love to see them shed some of that debt. But you gotta think at some point here. I mean, they still sell the U.S.'s number one pickup truck seller,
right?
And we live in Houston,
right? And, so and a bunch of successful SUVs as well.
Yeah, but can't imagine. I can't. It's starting to get awful tempting. I'm not going to buy it. I'm not recommending a buy on Ford, but I'm telling you. It was at this level back in 2012, and it went from $9 a share to $18. Yeah. So in a matter of about a year.
But don't you have to consider, one, yes, fundamental, but where you are in the economic cycle, and two, borrowing costs, right? Auto loans.
Well,
the zero interest rate loan is going away.
Yep.
So,
and the average car note's now $585 a month.
Right. So that pressure doesn't seem good. But on a fundamental basis, maybe I want to talk a little about when we come back. Hey, something can look good fundamentally, but technically,
it's called a value trap.
It's called emerging markets.
Oh, boy. I'm going to get him a shirt that says, I heart emerging markets.
All right, we'll be back. I'm your host, Lance Roberts, and you're listening to The Lance Roberts Show with John Coumarianos, our analyst, and, of course, Richard Rosso, certified financial planner. Don't go away.
Want a longer talk with Lance about your money? Request a personal one-on-one at lancerobertsshow.com.